latest global stock market analysis as of April 5, 2025. 1. U.S. stocks plunge to record lows, tech sector collapses. U.S. market performance. U.S. stocks extended losses for a second consecutive day, with the Dow Jones Industrial Average plummeting over 3,000 points cumulatively, the largest two-day drop in history, to close at 38,314.86, down 5.50% for the day. The S&P 500 fell 5.97%, and the Nasdaq Composite dropped 5.82%, now down over 22% from its all-time high and entering a technical bear market. Total U.S. market capitalization evaporated by more than $6 trillion over 2 days, marking the worst sell-off in history. Tech wreck, Apple, AAPL, plunged over 16% in 2 days, losing its $3 trillion valuation. Tesla, TSLA, NVIDIA, NVDA, and other Magnificent Seven tech giants collectively shed $840 billion in market value in a single day. Triggers. U.S. President Trump announced sweeping reciprocal tariffs on imports, for example, 54% on China, 46% on Vietnam, escalating fears of a global trade war. China retaliated by imposing 34% tariffs on all U.S. goods and adding American firms to an export control list. J.P. Morgan Chase raised the probability of a U.S. economic recession to 60%, warning that tariffs could trigger a global downturn. Fed Chair Powell stated tariffs may keep inflation elevated long-term, ruling out rate cuts and intensifying stagflation fears. 2. European markets tumble, safe haven demand surges. European markets. The Euro Stoxx 50 fell 3.47%, France's CAC 40 dropped 3.26%, Germany's DAX slid 2.73%, and the UK's FTSE 100 declined 1.52%. Companies reliant on Chinese exports, for example, Boeing, Caterpillar, saw steep losses, reflecting trade war spillovers into the real economy. Safe haven moves. U.S. Treasury yields crashed, the 10-year yield plunged below 4%, while the 2-year yield dropped to 3.717%, signaling a flight to bonds. The yen surged to 145 yen and 20 cents per USD, a 6-month high, while gold briefly dipped to $3.016/oz before rebounding. 3. Asian markets hit hard, emerging markets under pressure. Asia-Pacific markets. Japan's Nikkei 225 tumbled 10% weekly to 33,780 points, South Korea's Kospi fell 0.9%, and Australia's ASX 200 slid 2.4%. Vietnam's stock market, hardest hit by tariffs, plunged 10% for the week. China, Hong Kong, and Taiwan markets were closed for the Qingming Festival, avoiding immediate pressure, but analysts warn of a catch-up sell-off post-holiday. Commodities. Oil prices collapsed, Brent crude hit a 4-year low at $65.58/barrel, while WTI crude dropped 7.4% to $61.99/barrel, reflecting global demand recession fears. 4. Market outlook and key risks. Policy risks. The Fed faces a dilemma: tariffs stoke inflation, but recession risks may force premature rate cuts. Markets now price in 84 basis points of rate cuts in 2024, with a 80.7% chance of a June cut. Geopolitical uncertainty, escalating US-China trade tensions and US election year volatility could prolong market turbulence. Investment strategy shifts. Analysts recommend trimming exposure to overvalued tech stocks and rotating into defensive sectors, utilities, consumer staples, or high-yield bonds with stable cash flows. Institution/S&P 500 targets. RBC cut its year-end forecast from 6,600 to 5,550. Conclusion. The market is dominated by recession trading and stagflation fears driven by trade wars. Investors should monitor policy shifts and corporate earnings guidance closely. Volatility is likely to persist in the short term, emphasizing the need for diversification and safe haven allocations.